How's it going, everyone? It's Sam. We have to talk about some of the stocks that are still down significantly, some 50%, some even more, that I think could boom. So, in my last video, I talked about how the indexes were down today, but some of our high growth plays, some of the high growth stocks, were actually up a decent amount, which was surprising because we've seen the opposite of this happen for a while here, where the indexes are slightly up and a lot of the growth oriented stocks are just being slammed. So we are going to talk about some stocks I think could do really well today. A lot of them, actually all four of them, I'm invested in pretty significantly. Now, this is not an all-inclusive list. I'm weighing risk reward a little bit. So there are some stocks like Senseonics stock that I think have a very bright future, but they are a little bit riskier. They're biotech plays, and these ones today are a little bit bigger companies, a little bit less risky in my opinion. There are also some other companies that I think could be included, but maybe have a little bit less upside potential, or, I just can't include all of them. So I'm going to talk to you about the four stocks today. Again, if these go up to prior levels, a lot of them will double. A lot of them should probably do even more than that over the coming year or 2 years. Now, if you want to see the video that I did earlier, I'll put it up on the end screen. I think it's really important to get an idea for what I'm saying with the indexes moving and creating a possible return to growth. So I'll put that up on the end screen. But this video is going to be covering those four stocks that I think could double. Now, before we get started, if you guys don't mind hitting the like button, I really appreciate that. Actually just got tested positive. So I want to make this video because I realize a lot of people are saying, okay, that's great that growth might boom here in the future, but what is at a good value? People always want to know that. So I want to make this video. So if you guys don't mind hitting the like button, it helps out the channel a lot. There is a link down there to Webull in case you want 2 free stocks worth up to $1,850. Definitely check out that link. There is a link down there to Patreon too. If you guys want to sign up, you can see exactly what I'm buying and selling. I bought a couple of these companies today, so you guys can check out that link down below to Patreon and join the community of about 4,000 other people. There's also a link down there to BlockFi in case you want interest rate on your cryptocurrency. So again, a lot of different companies could be included in this, and not all these companies are ones that I'm buying right now, but they're all companies I have on my radar. So one company that isn't included on here is actually LifeMD. It's a company I actually bought more shares of today. They got hammered after a big earnings miss yesterday, so pay attention to that one too. If you guys want, you can definitely do some research on that. But the first company on here is MP Materials. This company spiked up to $50 per share, and honestly probably should have gone up significantly higher than that after they had their earnings report. I think this is a company that will be really important moving forward. So if you don't know what this company does, this company is in the rare earth material sector. So a lot of companies are in this sector, but they're over in China. So a vast majority of rare earth materials are actually from China, about 85%. MP Materials is the largest producer on this side of the world. So this is a really important company moving forward because rare earth materials are used in batteries, that are used in a lot of different technologies that we will need if we want to continue to grow technologically. So this is going to be a really important company. They smashed earnings. They are going to have some convertible notes, and they also announced that there's going to be someone that has a large stake in them that is selling part of their stake. So they fell on this news. They've continuously fallen over the last couple days. Now they started to come up a little bit. You can see that before they were floating around that $50 range, they've fallen about 30%. Now I think this company is going to be imperative moving forward, and I understand that they are trying to raise a little bit of money. So I understand what they did, but it did cause the share price to go down. This is about a $6 billion company that is worth a very large amount to the US. So the US, I don't think will let this company fail. The next company on this list is Teladoc. This is a company that's been expanding their revenues drastically, and with the fact that the growth is being sold off a little bit, and with the fact that we might get out of this pandemic moving forward, a lot of people have been selling Teladoc. A lot of people think, okay, this company was great, but we think that people are going to return to normal and they aren't going to have telehealth visits anymore, or the rise that they've seen is going to be dramatically affected and they won't be able to continue this growth rate. Now, I personally like this company now more than ever because it has fallen about 40%. This company is a $27 billion telehealth giant that is growing very quickly. Some people are a little bit worried about Amazon. However, this company has some big connections, some big partners, and it takes a while to become this large in the space and to become this successful. This is not something that you can just throw money at. Now, that helps, but Teladoc is really the leader in this market. Now, another company that I'm invested in that's a lot smaller, again, is LifeMD. They have a telehealth sector or part of their business too, but it's growing a little bit quicker. It's also a lot riskier too. But Teladoc is a massive company. I think it's here to stay. I think there's the new normal where people are going to want to save money, save time, and just visit a lot of their doctors or visit some of the time with their doctors over telehealth as opposed to actually going in person, because a lot of the stuff you don't actually need to go in person for. The next company is Palantir. So a lot of people were worried about Palantir. It's kind of a hard company to understand exactly what they do. They are a data company essentially though. They have big data analytics. They solve a lot of problems for a lot of different industries. And this company's fallen about 42%. They recently had a lockup period end for some of their employees, and it's caused a lot of sell-off, especially because a lot of people thought this company was overvalued before. It's about a $40 billion company, and over the coming years, I don't see this company going down from here. At $22, I think it's really a steal. Again, I think this is a company that has a very bright future, and as they get more and more contracts, it will just be a continuous amount of catalysts that push the stock price up. We have a lot of people that in the low 20s are starting to really consider this company too. Now, the last company I want to bring up today is GHVI. This is the company merging with Matterport. This company has gone from $24.46 down about 47%. And this company has not been lower since they've been announced. Now, I think this company, again, another company that's in a sector that I don't even think we can comprehend everything they can do yet. So right now they're used a lot for 3D modeling inside of houses for Redfin, let's say. So that's what they do right now, but they can be used in insurance. They can be used in construction. They can be used in a lot of different circumstances. And right now, them being valued around 13, you're almost buying it at pipe value. So we're getting a very interesting look at the company and a really interesting valuation, I should say. Now, one other thing you can do, if you don't think that the market's going to return, but you still want to invest in some potential high growth plays, you could start investing in a lot of SPACs that are around net asset value. Now, some companies might be overvalued still, so something like ACIC, which is 4 years away from revenue, and they're valued at $3.6 billion, that might be a lot riskier than something like Redwire, which is a company I've been buying, GNPK, which is a company, again, I think has a very bright future. I've been buying it a lot over the last couple weeks, and this company is being valued around about $750 million, and they're already cash flow positive. But that company is also right around $10, so you might be able to pick up some different SPACs that are around that $10 mark. So even if they fall down or the general market falls down, these companies won't be as affected. But if we see kind of what happened after the last little correction a couple weeks ago, a lot of these growth stocks like, let's say, NIO, Tesla, they jumped back up, and a lot of these SPACs were stuck around $10, $11, so they didn't have as much upside. But that's where you just have to pick out the right companies and ones that you actually like, not just companies that are around $10. That's not going to work like it did 3-4 months ago. So let me know your thoughts on this. Let me know what stocks you're looking at. Of course, this is not an all-inclusive list. These are just some opinions of mine, and they're companies that I'm looking into and keeping an eye on. Thank you guys so much. I appreciate you guys liking the video, subscribing, maybe sharing this with someone else. Thank you for checking out the links down below. And I will see you guys in the next video. I'll put up the video here on the market kind of reversing on the end screen. Thank you.